Okay. Yeah. So most of us, if most of us that we are working at the institutions and organizations, at the end of the month, we are going to get paid, no matter what will happen to the will happen in the organization. Okay, we are still going to get paid. And I said, even if our salary delays, we are still going to get paid, even if it delays like maybe a week before. We are still going to get paid. You get it? So I brought that concept of certainty. You get it? I became what emotionally what attached to the results that I get when I what lose a trade. When it comes to this game that I'm playing, I mostly became attached to everything that happens in this game. You get it? But when I came into trading, when I traded for a very long time, trading has taught me a lot of things. You get it? How to master emotion, how to detach from things. So for now, I mostly don't get attached when something bad happens to me, because I understand that, oh, maybe this is how the world works. Okay, this is how the world works. So what I will do is what I will just learn my lesson. I will just ask myself, what did I do wrong that this thing happens to me? I'll just learn from it and I'll move on. Those times I used to get like attached to things. You get it? I usually get attached to things. If I'm in relationship, I'm too attached. You get it? I'm too attached. And when you get heartbroken, when you get heartbroken, it really, really hits you hard. But for now, I'm not attached to anything. I'm not attached to any family member. So maybe I'm not saying something of that sort to happen. But in case maybe I'm being called, oh, maybe this has happened to a family of yours, or maybe a family member of yours. Oh, it's normal, because there's no certainty when it comes to this world. As I'm talking to you now, tomorrow you might not be hearing from me. You might heard, oh, this guy that is teaching Forex is dead. It is normal. It is bound to happen. You get it? So something of that sort. This is how I've currently psyched my mind. You get it? This is how currently I've psyched my mind. If it is something that I can learn from, you get it? They said losses are not what? Losses are not losses. Okay, they are lessons that we learn from. Losses are not something that you are going to you have lost, but what it is, a learning phase that you need to learn from. So if something bad happens to you and you don't learn from those things, you get it, that is when it becomes a loss. But if you find out why you lost, if you find out why you lose that thing, you learn from that, it becomes a lesson. You've learned something that is going to save you a lot. You get it? So when I came into trading at the initial stage, when I came into trading at the beginning stage, I was not having this thinking. I wasn't having this thoughts that when it comes to trading, it is game of probabilities. I know most of us have heard of probability. It's a game of chances. That is what you need to understand. So that is why I always advise people that you shouldn't be too attached when it comes to your trading outcome or when it comes to trading results. So those who are in my boot camp currently, last week I had a loss on GBP USD. I did a breakdown on why I lost the trade. That was a day before I did a breakdown. I showed them. I gave them even a YouTube video that I've recorded on the same setup. I did it step by steps to them on why I took that setup, and I've taken that setup before and it played out, and why this time it failed. So we did everything. We broke down the charts inside the current bootcamp that is going on. We broke down. I did a breakdown step by step. I showed it to them. I played my YouTube video too, and I showed it to them why I took that trade. You get it? And it is something that is in my playbook. It is something that I've taken it before. And this time when I took it, what happened is what? The trade failed. You get it? It failed. I explained it to them and it failed. What did I do? I just went back to my YouTube video, the setup that I recorded. You get it? I just watched the video and I noticed I did nothing wrong. I waited for price to break out. I waited for the pullback on the key level. I took my trade. There was no news event. We were what? In volume time. You get it? We were in volume time. We were in active market session. And I took the trade at that time. And what happened? It failed. So doesn't mean I have to be attached. I have to cry the whole day. I have to be depressed. Those times I would have been depressed about this thing that happens to me. By this time, I understood that this market can break you back and forth, back and forth. So as I noticed that I did nothing wrong, I just as in called it a day and came back another day. And that trade that I took played out. It was just ranging. You get it? When it comes to this market, one thing you need to understand is what? It is something that you have no control when it comes to where price. This is where price is currently at. So if price is going to move to this point, I have less control. I have no control on if price is going to get to this point or it's not going to get to this point. But do you know one thing that I have control over? One thing that I have control is what? The amount I'm willing to risk. How much I'm willing to lose on the trade if in case maybe I execute what? A buy over here. Think like anticipating or speculating that price is going to get to this side. The only thing that I have control is my loss. No matter the number of years you've traded in the market, you have no control. You get it? No one knows where price is going to get to. What we have control is what? We trade based on our experience level. You get it? So he said, as I said, I showed them why that trade, what I took that trade. I gave them evidences of what, where it has played out before, and the trade failed. You get it? So when it comes to where price is going to go, no trader, no guru on the internet, okay, no trader has control on where price is going to go. The only thing that we have control is what? Controlling the amount, okay, or determine the amount we are willing to lose. That is what every trader have control. So that is what you need to understand. But most of us, when you come into the game, we don't think that way. You get it? You mostly get depressed. So that's why I said trading is a game of certainty. So even though you have anticipated or you've budgeted that this month, you need to what? At least you need to get a profit of maybe $10,000, $1,000. But one thing you need to understand is what? This is just a projected figure. And it can, this $1,000 that you are budgeting to get from the market at the end of the month can be negative. You get it? It can be negative. So trading is a game of what? Uncertainty. Trading is a game of probability. So anytime you get ushered into this industry, when you get ushered into this game, you need to understand that it's a game of probabilities. It's a game of what? After getting your playbook, after getting your strategy, you need to understand that A+ setup, when you talk about A+ setup, something that mostly what? Plays out more of, if you take it, the chances of it playing out is like 90%. Okay, or some months you can even get the same playbook as what? You can get it as 100%, it will be playing out. You need to understand that it's going to get to some time, it's going to fail. Some trade, when you execute the same setup, it's going to fail. So what is going to save you at that moment is your risk management. Is what? Controlling the amount you are willing to lose. That is what you need to understand. But most of us, when we come into the game, we don't get introduced to this thing. Mostly what you get introduced to is what? Drawing your technical, drawing your support and resistances, understanding your market structure, the ICT, the fair value gap, and those stuffs. So I remember last year, I had, like, during the Christmas season, December was very bad, terrible. So those who have followed me for long will get to understand. December, you were having back-to-back losses, you were losing back-to-back. But one thing I understood, that one thing I understood during that time was what? The market condition was very bad. So it wasn't my fault. It was just the market condition. Those who are what? Those who move the market might be absent, and those who are moving the market are like, the market was just consolidated. If you execute, then it's what? It just moves the opposite. Okay, something that you've executed before, it will just move the opposite. So one thing I learned is what? No matter your strategy, when market is not in favor of you, no matter what, how the setup is looking good, you can still what? Lose the trade. So you need to take risk management. You need to take what? Risk management very, very seriously. You get it? You need to take it very, very seriously. Don't say this trade is looking good, or maybe you've lost like 3 times on a row. So you've seen a nice setup, like everything is aligned. The daily time frame is what? Maybe the daily time frame is a downtrend, H4 time frame is a downtrend, H1 time frame is a downtrend, MT, all the time frames are in the same direction. So you want to take a sell. And you'll be saying, oh, this trade looks good because all the time frames are in what? In your favor. So you are going to say, oh, it looks good. There's no way you are going to lose this trade. Please, when you think like when you have this mindset, One thing you need to understand is what you are not going to keep in this game. You get it? You are really going to what go to the village very fast. So you need to understand that risk management, okay, is as equally important as what the strategy you are yearning for, the support and resistances you are drawing on the line, the trend line you are drawing on the line, the market structure you are reading. Okay, those things are not the ones that's what moves price. What moves price is what the various institution, the hedge funds, the big institution. Those are the people who moves price. If they decide they are going to push price up, price, because they have huge funds, price is going to push up. If they decide they move price down, price is going to move down. So it doesn't matter. That's why sometimes even trend, that's why the market doesn't trend in one direction. We don't have higher highs and higher low, higher high and higher low. So sometimes that's why we have what trend invalidation. You get it? So maybe you are anticipating price is going to move up. Trend can invalidate it, what the uptrend can be invalidated, what a downtrend. You get it? So maybe if you are being caught that you are taking a buy over here and price gets invalidated over, you are going to lose. So if you don't manage your money well, you are going to lose your whole account. So you need to understand that what risk management is very, very important. So if you are in this game and you lose a trade, you need to get used to. You get it? You need to get used to. Because even if you trade like 10 years, even if you trade like 15 years, you are still going to what? Experience these losses. But one thing that separates those people from beginners, those people from the immature traders, is what? How they handle their emotion. They don't revenge on the trade. That I want to get my money back. That's what most people do. When they lose a trade, they don't find out why they even lost the trade. They don't find out why they even lost the trade. What they do is what they are trying to what get their money back. This you can't fight this market. If you lose a trade, just find out what did you do wrong. So I've given you, those who have followed me for long, I've been giving you the tips, the things that you need to consider when you lose a trade. You need to first of all factor, was there any high impact news? You need to also check were you trading on a higher time frame support or resistance? You need to also check, were you trading in the direction of the higher time frame? Okay, you need to check all these things and check the timing you were trading. If you check all these things, okay, these are the few that I can tell you. These are the few things that I can tell you. So if you check all these things and you notice that you are doing the right thing, you did the right thing rather, then you have to understand that it was market condition. You get it? Market failure. That's what you need to understand. It was just a market failure. So don't just be too attached with the trading outcome. Just always try to improve. If the market proves you wrong, one thing you need to understand, figure it out. Figure out why you lost the trade. Figure out why you lost the trade. You get it? And next time you don't repeat the same mistake that you did. That's what you need to understand about the market, okay? So that you don't repeat the same mistake that you did. So trading is a game of probability. And when it comes to probability, probability is probability is just a game of chances, okay? It's just a game of chances. So when it comes to probability, it's not sequence. You get it? It doesn't follow. Okay? So, like, you all know that if you are thinking that trading, the trading curve, okay, maybe, or your portfolio or your equity curve is going to move like this, please, you are getting it wrong. The equity curve, every trader's equity curve or portfolio doesn't move like this. You get it? Your trading account is not going to move like this every day. Okay, this is how it moves. A profitable trader's equity curve looks like this. It moves up, it moves like this. The same thing like how the market moves. It moves up. Sometimes you'll be in a winning streak, and the market maybe start disciplining you small. But they don't. Sometimes you can even get a deep drawdown like this. Sometimes you can get a deep drawdown. Okay, then you start rising again. So you see, they don't move down up to what 100%. That's when you move down up to 100%. That means what you've blown your account. When it happens like that, it means the trend has changed. So if your equity curve looks like this, I'm not saying like if you're a pro trader, you don't blow accounts. You can sometimes blow accounts based on what maybe the percentage or the amount you are risking on your account. You can sometimes blow your account. But if you are what managing your risk well, you get it. You're giving yourself like with the trade, with your account balance, giving yourself like maybe 10 chances, giving yourself like maybe 15 chances or 20 chances before the account is going to get blown. It's going to take a very long time for you to blow the account. You are not going to blow your account on a single trade. You are not going to blow your account on maybe 3 trades. It's going to take like maybe 10, 15 losing streaks, and it is sometimes impossible for you to be losing on a row like 10 times. That means there's something wrong. That's when you have to check your strategy. And for me like this, it's impossible for me to lose like 5 times on a row. If I lose 5 times, even 3 times, it's very hard. 3 times on a row, that means there's something wrong with my strategy, or maybe there's something wrong I'm doing. Either I'm entering trade impulsively, okay, or I'm being attached with the trade, so I'm trying to recover my losses. So I do things very fast. That's one, it can happen. I can blow the account. But if I'm trading based on logic, I'm not trading based on my feelings because I want to recover my losses. So like I'm just managing my trade carefully. It's going to be very hard for me to blow. It's going to take time. Okay, it's going to take me. I'm going to play the game for a very long time. So when it comes to trading, it's not about it's not about you getting the wins alone. It's about you planning to be in the game the following day. You get it? Can you play the game the following? It's like casino. If going to the casino and losing everything. What if the following day opportunity comes and it aligns perfectly with how you see things? You are not going to get the money to bet at that instant or at that moment. You get it? Because you've lost everything at that day. That is why you need to manage your trade. Even if you lose today, tomorrow, if opportunity presents yourself, you can still give it a try. You get it? So what I'm going to be talking about today is I'm not going to be telling you risk 2%. I'm not going to be telling you risk 1%. But you need to give yourself chances. Okay? You need to give yourself. So sometimes, if I'm executing a trade, maybe I want to take a buy over here. Okay, if I want to take a buy over here, sometimes the market will just stop me out. And later, so last week when I did backtesting, you guys saw it yourself. We noticed that sometimes the market will stop us out, and it will just be an exhaustion candle, and price will start moving in our favor. You get it? That is what market conditions. Some people will call it liquidity grab. Okay, the market will See, I'm not saying it's intentional because I don't know how I don't know what is going on. Okay, so what happens is the price can take you out, the candle can just take you out, okay, just with an exhaustion, very small, and it will start moving in your favor. So let's say if you lose or if you risk all your accounts on this move, the first chance that you give yourself, how are you going to take advantage of the second opportunity that's going to present itself? So you need to make sure you are managing your trade. You need to make sure you are giving yourself chances. So me, taking myself an example as a trader, what I mostly do is within a day, I give myself like 2 chances. The maximum is 3. If I take like first trade, I lose. Second trade, I lose. I'm going to call it a day. You get it? I'm going to call it a day. I'm not going to execute again. I'm just going to close my laptop, my desktop. I'm not going to check the market again. Even if I'm going to check, I'm going to make sure I'm going to discipline myself not to execute a trade, and I will come again the following day. That is what you call discipline. So if you don't know all these things and you are just revenging, you can't revenge. Mostly it happens to beginners. Don't try to fight the market, and it mostly happens to those who don't have system, those who don't have chances, those who don't have an edge, okay, a statistical advantage over the market. That is what they do most often. They just try to hit them. If the market take them out, they will just try to just do random things and trade it again. They will do random things. And even if you are trading demo account, try to discipline yourself in such a way that you don't disobey these rules that I'm talking about. Try to be disciplined, because the same character that you are building on your demo account is the same thing that it's going to transition to your live account too as well. So try to be disciplined. I remember when I was trading demo, when I was when I started out trying to find an edge, I was very, very obsessed. I was mostly get annoyed if I lose a trade, because one thing I understood is if I'm doing things randomly, this thing is going to delay my success when it comes to this thing that I'm doing. Okay, it's going to delay my success if I'm not doing the right thing. How am I going to find an edge and transition to live account? You get it? So I was really, really disciplining myself when it comes to this game. Even on demo account, I don't take random trades. I don't trade big because I just want to feel like. Nah, you need to take that thing out of your mind. Be disciplined on your trade executions. You get it? Be disciplined. Even on your demo account, be disciplined. That is how you are going to track your progress. If you are not tracking your progress or performance, how can you transition to maybe try to live account? With the live account, how can you transition to a bigger account size? You get it? Then maybe if you are trading 1,000 accounts and you are just being indisciplined, how can you transition to 10,000, the 1 million, 100,000, the 1 million? You need to be very, very disciplined. So as I'm saying, have this mindset that trading is a game of certainties. Trading is a game of probability. So that's why I mostly advise that you don't have to just rely solely as your for trading as your only source of income. You get it doesn't work that way, and it's going to even delay you when it comes to your success in this game. Okay, have something doing as you are trading too as well. You get it? But I always say, when it comes to when it comes to trading, when it comes to the revenue or the returns that you are going to get from trading, it's very huge. It's very big. You get it? It can't be compared to the other side hustling. Trading is having a huge leverage that no industry or field is going to give it to you. Because if you are good, if you have the skill set, if you are very good at what you do, you can be getting imagine you are in Africa and getting 1,000 a day, getting maybe even $500 a day. You get it? You will live like a king. That's what you need to understand. So as you are putting in much effort into trading, try to have something going on so that you don't put much pressure on trading. If you are pressuring this thing, it's not going to work for you. That's the reality about trading. If you are putting much effort, if you are putting much not effort, if you are trying to pressure, forcing things to happen, it's never going to happen. That's the nature of this game that you are in. So just take it slow, take your time and build a skill. Have an edge. What do you do? What do you look for when you come to the market? If you don't have what you look for when you come to the market, you are not there yet. You get it? If you can't explain your system, if you can't explain your strategy, you are not there yet. Just take your time and build yourself. That's what you need to understand about trading. If you can't explain your system within less than a minute or 60 seconds, you can't explain your system, you are not there yet. Find something doing and do this one too as well. Okay, build yourself gradually. It's not going to happen in a day. It takes time. Build yourself gradually. Give yourself time. 1 year, 2 years, 3 years. Build yourself. And as I'm saying, you are not just going to be sitting and be waiting for things to just happen magically. It doesn't work that way. As you are giving yourself time, you are every day working on this thing. You get it? You are every day working on this thing. Don't focus solely as a trading as your source of income. Those who mostly don't focus solely on trading as their source of income are the ones who becomes profitable. You get it? You need to have something going on and at the same time be doing trading. That is what is going to give you the clarity. That is what is going to give you it's not going to make you put pressure on trading. You are just going to take your time. You are going to execute. One thing I'm saying is a lot of people think they have to be executing trades every day. That's what brings the stress. That's what brings the pressure. They think they have to take trades every day. Okay. Or trading is something maybe sporty bet. Every day there was a match. Okay. Every day, even if not football match, you can bet on horses. You can bet on this. You can bet on this. So every day there's chance for me to trading doesn't work that way. If you have a system, even if you are scalping, sometimes you come to the market and there's not going to be opportunity. The market is just going to be and equal highs and equal lows. There was no clear trend. You get it? And sometimes it becomes very difficult if the market is consolidating or ranging. It becomes very difficult for you to execute on the trade. You get it? It becomes very difficult for you to get the direction of the market to what? To execute. So one thing you need to understand is what? You are not going to be executing trades every day, but you have to be present every day and what? Watch the market. You get it? You are not going to be getting trades every day, but you need to be present in the market and watch it every day. That's what you need to understand. So the time that trading is not giving you opportunity, or the month that things are not going on well, that's other source is also going to what? Improvise. That source is going to provide for you when trading is not going on. That is when it's going to give you the peace of mind. You can be in the game for a very long time. By the moment you start putting pressure on yourself, start trying to force things to happen in trading, that is when you don't last in trading. So a lot of people come into this game. I've been there before. I started this journey with a lot of people, but when they come into the game, they were thinking like things is going to work magically, things is going to work very fast. So they ended up giving up. A lot of them don't even remember what trading means, because at the initial stage they have the quick mindset, they have the quick as in things happening to them very quick without building themselves. You get it? Something that can give you a huge amount of returns, don't expect it to happen in just a short space of time. It's going to take you time. Okay, so understand that you are not going to be getting trades every day. That is what you need to understand. That is what you need to that is what is going to help you, okay, having that mindset as in probability and uncertainty. That is what's going to help you to also be profitable in trading. You get it? The moment you take your time, you wait for things to align, you wait for candle to close, you wait for the right session. You don't put a lot of pressure on you. That is when trading starts clicking for you. You get it? You show up every single day. When your trading setup appears, or when a setup that is in your playbook appears, you execute. That is when things start working for you. You get it? So as you are working on your technical analysis, please put much effort on your risk management too as well. So even if you're having like $20 account, if you're having like $50 account, try to tell yourself, I'm going to lose like maybe $5 on every single day. And okay, so this is what you need to understand. These are the things that you need to understand about the risk management part that I'm talking about. Risk management in trading simply means controlling the amount you are willing to lose. Okay, controlling and analyzing the amount you are willing to lose. So you need to ask yourself, okay, maybe when it comes to the monetary terms, this is the amount I'm willing to risk on my $50 account. For every particular trade that I'm going to take, I'm willing to risk like $5 on the trade. You get it? I'm willing to risk $5 on the trade. And within a day, I'm going to give myself 2 chances or maybe 3 chances. You get it? Don't trade more. The more you trade, the more you become attached. The more you start revenging. Okay, these are the things you need to ask yourself. With my $50 account, I'm going to risk $5 per trade. Within a day, I'm willing to trade or take 2 trades. Okay, that is when opportunity happens. It doesn't mean because you've told yourself that within a day you are willing to lose like two times. Okay, or you are willing to take 2 trades. Even if setups has not appeared or setup has not presented itself, you are still going to force things to happen. What I'm talking about here is when opportunity presents itself. Okay, if opportunity has not presented itself, you are not going to execute. That is what you need to tell yourself. Okay, so this is something that is not like a lot of beginners are not being told about. A lot of beginners are not aware of this thing. That's why they keep on telling themselves trading, this thing does not work. It's one trade. So there was this book that was written, but I've forgotten the author. He says you just one trade. Okay, just one trade is going to wipe away all your losses, and you are going to be in a win. Last time a student of mine was in a drawdown on his account, and just one go trade just took away all his losses, and he came back into profit. So trading is all about risk management. At certain points in your trading journey, or in some weeks, you are going to be in a losing streak. You get it? Losses are going to be happening. Losses are going to be happening. Sometimes you might be doing everything right, but losses are going to be happening. So when it happens like that, what you need to tell yourself, or what you need to advise yourself, or what is what apply risk management. When you apply risk management, you might be shocked that at the end of the week, you are only going to lose like maybe 5% on your account. You are not losing much. You are losing like 5% on your account. So if you have not found your edge, those who are flipping accounts, those who are trying to double the accounts, are those who know what they are doing, and at the same time they can fund it quickly. If you are someone that you knew that you struggle before getting that $50, manage it well. Okay, and as you are trading the account, you are building yourself. Every loss is a lesson. That is, don't get attached. I'm here, I'm having a system now. It's because of what? Taking back to back losses, learning from them. That is what has ended me. I didn't get discouraged, even though at a certain point I was discouraged, I was frustrated of the losses, but now I'm numb to losses. You get it? I'm now numb to losses. I don't get attached. I don't get emotional. I just, it was one of the losing trade. Then I'll just call it a day, or maybe I'll just find another opportunity. If it doesn't happen, then I'll just call it again, come again, because I understand that, and I've come to understand that when it comes to trading, opportunities are going to come the next day, or if not the next day, the following day. If not the following day, maybe the following week, opportunity is going to present itself. You get it? So you need to make sure, if you are a beginner, if you are not having a system and you are learning, manage your risks. And if you are someone who it's very hard, it's going to be very hard for you to find your account, to need to understand that you are going to manage your account so that you can trade it for long. And if you're a beginner and you find your account, don't be thinking about the profit you are going to get on the account. What you need to think about is what you are using this account to learn from the market. Because if you don't learn, you can't earn. That is how the market works. You learn before you earn. Okay, you learn from the market before you earn. So if you have not learned a lot from the market, or if the market has not taught you enough, or you've not gotten a lot of experience in this market, don't be finding your account thinking you are going to grow it. Think about getting experience. Think about finding your edge in this market. Okay, gaining a lot of experience. Just play with that small money. It is something that even if you lose, it's not, you are not going to get annoyed. You are learning. Okay, if you are a beginner, the first year should be your learning phase. You shouldn't be like, come to flip an account. Okay, even if you sometimes if you get some winning trades, it is just a beginner's luck. If you know you don't have a strategy, you don't have a system, and you win a trade, you need to understand that it's just a beginner's luck. You are still going to lose it back to the market again. So if you are starting out, understand that you are learning. You get it? You are learning. Last time as we did the back test, and you guys saw how what I was doing was playing out. You get it? Because I have a lot of experience. I have a system now. So if I say I'm finding my account like maybe $1,000 and I'm trying to flip it to maybe $10,000, I'm trying to over leverage on my account, I know what I'm doing. But if you don't know what you are doing, you need to understand, learn about risk management as you are learning about the strategy too as well. Learn about risk management. That is what you can take like 10 trades, 10 losses on a row, and you are still going to be in the game. You are not going to you are not going to fund your account again. You are still going to be in the game. So maybe you can lose like $5. If you lose $5 and $100 account, it's left with what? Your $95. If you lose again, it's left your $90. You still have what? You still have you still have money to play the game again. You get it? You still have money to play the game again. But if you lose it all, maybe your first trade, you just lost like $50. You just have only one chance left. Trading is a game of uncertainty. It's a game of chances. It's a game of probability. I showed you the equity curve, how mostly the equity curve moves. So sometimes you can start a fresh account, and the fresh account, you are just going to be in drawdown. You are just going to be in drawdown. It happens to everyone. Sometimes your first account, you find account, the first trade, you are going to be in drawdown, and you start climbing. You get it? You start climbing. Sometimes losses will come. You start climbing. Sometimes you can get a deep drawdown. So trading is a battle. You get it? It's not a smooth ride. It's a battle. You get it? Every day when you come to the market, you need to understand that you are fighting with what? Major players. You are fighting with big institutions, the city banks, okay, the JP Morgans. You are fighting with what? The big institutions. Okay, they are saying the market is going to buy. You're also saying the market is. So you are always fighting. So anytime you come to the market, understand that it's a war of what? It's just a battle. You get it? You are trying to scratch something from the market, and it's not going to be easy. So you need to be very disciplined by obeying your rules. Very disciplined. So one thing that I've been applying in my trading, okay, is when I disobey my rules, I just don't trade for the week again. That's what I do. Anytime, maybe if I lose a trade and I like something, I feel like I want to revenge, trying to get my money back, and I do, and I lose again, I will just discipline my trade. I will just tell myself, you've missed all your chances. Okay, you've missed your chances. You are not going to trade again for the week. That is what I've implemented in my. So I do, since I want to trade and I don't want to be there, and because I disobeyed my rules, I'm not going to be trading, even if opportunity presents itself. I'm just going to be disciplined and be in my lane. So you need to set some rules for yourself that if you are you disobey these rules, these are what you are going to be disciplining yourself. Because when it comes to trading, you are your own manager. When it comes to business, business, you have sales manager, you have advertisement management, manager or management, you have the general manager, you have accountant. You are you are a body of an organization. You are everything some. You are your risk manager. You are your executor. You are the one going to execute the trade. You are your psychologist. You are everything. So if you are not setting rules for yourself, then it's going to be, you are always going to keep on disobeying your rules. You keep on disobeying your rules. So even if you if you disobey your rules, you just tell yourself, oh, maybe you just punish yourself so that you don't repeat that thing again. Okay, punish yourself. Something that maybe you hate doing. You get it? You can maybe just walk a distance, a long distance, a distance that you can be taking a car. Because you've disobeyed your rules, just tell yourself, I'm going to punish myself. Walk a distance, maybe from, you get it? Just walk a long distance that you are going to get tired. So that anytime you are going to disobey your rules, this thing will just prompt you that if I disobey my rules, these are the consequences I'm going to go through. That is what for me, if I disobey, this is the punishment I've given. Even if Tuesday, I disobey my rules, maybe instead of me to wait for a candle to close, because I was just in rush, I want to execute. If I execute and I lose the trade and I reanalyze the trade and it was like an intentional mistake that I did, I'll just call it a week. That is what I've told myself. Okay, so I'm being cautious. If I lose a trade and analyze and I notice that the loss was not an intentional, I will keep on trading. You get it? Because trading is an emotional game. Trading is a behavioral game. Game that you are playing. Okay, it is not rocket science. It is behavioral. Okay, your behavior plays a major role when it comes to trading. So that's what you need to understand. So understand this thing that trading is a game of probability, and anytime you are executing a trade, no matter how the setup looks good, no matter how perfect the setup looks, it can still fail. Okay, so someone might ask, oh, if trading is about probabilities, how can one be successful? You can be successful when you apply risk management. Okay, when you are winning a trade, you just stay disciplined. You don't be in rush to cut your losses. Allow the trade to run. You get it? Allow the trade to get to its full potential. Okay, when you are losing, cut your losses short. Cutting your losses short doesn't mean you are going to maybe not manage the trade properly. Maybe if this I've executed a trade on this key level, this is the candle over here. This is what I'm talking about. Maybe if I've executed a trade over here, maybe this candle has closed nice, because if you look at this candle, there was an exhaustion over here. So the psychology behind this candle. So those who have joined my bootcamp, I taught you the psychology, or those who have gotten the course, I taught you the psychology behind the formation of candles. You don't have to memorize the names of the colors, or you don't have to memorize the name. What you need to understand is what the psychology behind the formation of this candle, formation of candle. If you watch this candle, it tells you that this long exhaustion, this long wick tells you that there was exhaustion, select exhaustion over here. So what it tells you that what buyers are currently pushing price hard. You get it? If you look at the body of the candles, everything shows that buyers are in control. So if I'm taking a buy and something of this sort, maybe if I'm taking the flip of the candle, okay, maybe if the candle breaks the high of this point, if the candle breaks the high of this one, so when you join the bootcamp, I thought about what candle structure. If it breaks the high, it tells you that what buyers are in control of the market. If something of this thing having, maybe if price just break, okay, and later what happened is what it just form a long wick like this and come down like a bearish candle. What I'm trying to say about managing your risks is what when it's something of this sort happens, what you need to understand is what some people are going to hold the trade. Meanwhile, you set your stop loss over here. For me, I'll set my stop loss over here. Maybe I'll set my stop loss over here. So what most people do is after price has broken, they feel like, oh, the thing will just, so far as it has made a wick over here, it is just going to start. One thing, if you understand, so anytime you are placing a stop loss, you need to understand what? You need to understand structures. You get it? You need to understand structures. I place my stop loss based on either pattern structures or candle structures. I understand that if price has broken the low over here, what this thing signifies is that what price is going to move up. Because if a candle, okay, if maybe a candle has closed bullish and the next candle breaks the previous bullish high, it tells you that what buyers are in control. So price is going to keep on moving high. So at this point, if price has broken the low of this candle, what it signals is that what price is going to keep on moving down. So when price break this one and even the candle has not closed, I'm going to close my trade quick. But what people mostly do is what they are going to hold the trade. That is when hope sets in. They will think or they will hope that price is going to keep on moving high, keep on moving high. But one thing you need to understand is what when you keep on doing these things, you are rather going to lose what more, because every stop loss that you place has been factored into the amount that you are losing. That is what you need to understand. Every stop loss that you place has been factored because you consider the pips of your stop loss in calculating what the amount you want to lose. So if I want to risk $5 over here and I've placed my stop loss over here, if this one hits this one, it means I'm going to lose $5. The pip, okay, the pips from this side, the pips from this side to this side has been factored into the amount that I want to risk. So this one is how many pips? So this one is like 400 and let's say 400 pips. Okay, it's like 401, but let's assume it's 400 pips. So with this 400 pips, if I want to lose $5, which sometimes is going to be very hard, even if I'm using 0.01, even if I'm using 0.01, if you multiply it by what's the monitoring value for 0.01, it's equal to what? 0.1 cent. So 0.1 cent. So with this 0.1 cent, if you multiply 0.01, sorry, it's equal to what? Sorry, the 0.01 lot size I use, the monitoring value is what? 0.1 cent. You get it? So after you've gotten the monitoring value, multiply the monitoring value by what? You multiply the monitoring value by your stop loss. What's your stop loss over here? We had 400 pips. So 400 pips. You multiply this by 0.1 times 400. It's going to give you $40. So with this one, even with the lowest loss size, you have already blown the main account. You get it? So our advice, if you are using $50, don't try trading gold. Trade currencies. Gold is going to wipe, even if you use 0.0, because currently gold pip value is very huge. It's very high. So even if you are using like the lowest loss size, you might end up blowing accounts. Okay, managing risks on such instruments or such pair is going to be very hard. Okay, so you see the $40 that we had over here. What made us got this $40? The 400 pips. This one. is what has been factored in for us to get this $40. You get it? So the moment, one thing you need to understand, the moment you start shifting your stop loss over here, you are increasing your risks. So now we are risking 720 pips. Multiply 0.1 times 720 pips. $72. You have increased your risks. You get it? So if you place your stop loss over here and price starts pulling back on you, don't try to massage, okay? Don't try to massage your stop loss and hoping. That is what mostly, this is the secret, okay? This is the secret, or this is the reason a lot of, if you can go deep into everyone's trading, as in like everyone's trading performance, you will notice that a lot of people are blowing accounts because of this reason. The moment trade starts pulling back on them and trade get to their stop loss, they start moving, pulling their stop loss back, okay, pulling it back, and by the time they realize the account is gone. How many people are victim of this thing? What I'm talking about? How many people have been doing this thing? If you are here and you've been doing this thing, let me know. How many people have been doing this thing? Hello? Can you hear me?
Yes, sir, we can hear you.
Hello? Yeah, so how many people have been doing this thing that I'm talking about? Or you guys have been managing your risks very well? Okay, so if no one is going to talk, so what I'm saying is a lot of us are blowing account because of this reason. We start massaging, we start pushing our stop loss back, we start pushing it back. And one thing that will surprise you is if you manage your risks if you understand risk management, okay, if you understand risk management, it will shock you. You are going to, even if you don't have a system, it's going to take you a very long time for you to blow an account. And that moment, you will learn during that phase. You will learn from your mistake. And one thing too is if you are not going back to your losses, if you are not revisiting your losses, you are just doing yourself a harm. Okay, you are not going to grow. You need to revisit your trades. Okay, you need to visit them, find out why you took that trade, find out why that thing happened. You get it? So stop massaging, because every stop loss that you place is being factored into your trade. So let's do a back testing. Okay, let's do a back testing and let's see how I'm going to manage that trade. Let's analyze something. So we are merging the strategy together with risk management, because most of us are being brainwashed. We only think about we always think about. So let's you analyze good. Let's move to GBP USD and see. Let's analyze, do a back testing about it and see if you will get a trade opportunity. So let's take any parts. GBP USD does not. Okay, let's take USD card, because GBP USD does not provide me much or give me much opportunities. Okay. So we are going to move at the directional time frame. So you need to understand, if you are coming, so you see, I told you people that if you come to the market and you don't know what you are doing, you can't explain your system. So for me, I'm a structure trader. I trade with I understand structure and I implement levels. Okay, I implement structure. I understand market structure very well, and I implement levels. So at this point, you have to ask myself, what's the trend of the market currently? If you have joined my training before, you understand where, or you clearly see where the trend of the market is. Currently, this is where we had a break of structure. At this point, all this one is complex structure. Price just made lows and highs. So this is a complex structure because the lower high hasn't been taken. So this is where the lower high was taken. So at this point, the trend shifted towards a downtrend over here. Okay, the trend shifted. So currently, the trend is a downtrend. So when I see something of this sort, I'm going to be taking a sell. Okay, so one thing you need to understand, you've not moved to the higher time frame. So let's move to H1 time frame. So if you move to H1 time frame, H1 time frame trend is also what? A downtrend, but the timing is very bad. But let's give it a try. See, the timing is very bad. Currently, it's what? We are heading towards the Asian session, and USD CAD does not move much during the Asian session. So by you, let's give it a try. So if I want to execute this trade, okay, if I want to execute this trade, one thing I would do is what? This is the high of this thing. Okay, let's say maybe I'm using the H4. Okay, I'm executing based on only the H4. I'm not moving to the lower time frame to find a better entry. So when I'm using the H4, my stop loss is going to be very wide. That's what I need to understand. My stop loss is going to be very wide because price is going to get invalidated only when it has broken the high over here. So this is the point I'm going to place my stop loss, which is very far because I'm using the H4 time frame. I'm sure if I move to the lower time frame, I would have gotten a better entry over here. But let's say, so if price break this one, I'm going to be taking a sell. So the moment I've gotten, so now I've gotten a setup, okay, I've gotten an entry. You get it? So if I want to take a sell, I need to factor my risks. I need to ask myself, how much, okay, am I willing to risk? Let's say maybe you are trading $100 account. If I'm trading $100 account, I need to ask myself, now I've gotten a setup, there's an entry. How much am I willing to risk on this $100 account? Let's say I'm risking $10. Okay. Don't risk all your accounts on one particular trade. I've already told you the nature or the attributes of trading. Trading is a game of probability. It's a game of uncertainties, a game of chances. Okay, it's like trying to play a die, throwing a dice. Okay, the chances of you playing 6, okay, or like maybe getting a 6 on a row the chances is very low. Okay, sometimes it can happen. But the majority of the time, we're going to just be playing other numbers before you get to the 6. It's the same when it comes to trading. This thing, I've traded it for a very long time and I know it's going to sell. I believe it's going to sell. But am I 100% sure or certain? No place. It's what? It's just uncertainty. I don't know what is going to happen because I have less control when it comes to where price is going to go. So with the $10 that I'm willing to risk, I need to factor my stop loss. That's what's going to help me to know my loss side. So what's the stop loss over here? So with my stop loss, if this point is my logical level that I'm willing, so you have to give it a breathing space because the market can just make a wick or spread can just take you out. So you need to give it a breathing room for price to breathe. Okay, if in case maybe it's pulling back. So you need to measure the stop loss pips. So if you measure over here is 22 pips. So 22 pips, you get it. So after I've gotten the 22 pips, you get it. After I've gotten to 22 pips, I have to ask myself, what is going to be my loss size that I'm going to use on the trade? You get it. What is going to be the loss size I'm going? So since I want to risk 10 pips, you get it. What loss size can I use? So those who are new, if you don't want to go through the stress of calculating it yourself, that is when you apply this risk management tool. Okay, you apply the risk management to baby pips position size calculator. I can do it manually, but for the sake of those who want to understand, okay, I can do try and error with the risk management and I'll just come out with. So even if I'm using 0.01, the monitoring value is going to be $1. So $1 multiplied by 22 is going to give me like $22. So that means I have to reduce my loss size to maybe 0. With that one, maybe most of you are going to get confused. So let's use the app. Okay, so if you use this position size calculator, so the account size is $100. You are willing to. So when you use my FX book, you can just swap it to percentage. So $10 with $10 is what? How many percent on? How many percent are you going to get when you are risking 10? So $10 divided by 100, which is the amount you are willing to risk, multiplied by the percentage, going to get us 0. Let me see, $100. Right? I'm getting it wrong. So 10 divided by 100 multiplied by 100%. So you are going to get 10%. 10 divided by, so this is how you can get a percentage of this one. So you are going to, the risks, okay, your risks divided by, your risks divided by amount, your total amount, your total account balance, okay, total account balance. Okay, then you multiply it by 100. You multiply it by 100. That's going to give you 10%. So that means our risk percentage is what? 10%. Are you guys with me? Are you guys following?
Yes, sir.
Okay. So the risk percentage is what? 10%. So 10, it's loading. Okay. So the risk percentage is, why is it not working? So baby pips percent science calculator. Why is it being slow? I'm sure maybe there was a problem. It's taking time to load. Sure, maybe. So let's use this one. My FX book. My FX book's position size calculator. I think there was a problem with baby. Okay, it has come. Okay, so he said account size is $100. Risk percentage is 10. Our stop loss is what? 22 pips. 22. So which currency pair are you trading? USD card. Okay, so maybe put one over here. So we are going to select the standard. Okay. So that means you can use 0.04. 0.04. So after getting the loss size, for you to know it is correct, you multiply this one by your stop loss to see if you are going to get the amount you are willing to lose. So this is the amount, this is the loss size this is the loss size you are going to use. You multiply it by 22. Loss size. So the loss you can use is point multiply use my I think Paris US card US card rates what 10%, right? The top two, so let's calculate 6, so 0.6 loss size. The monitoring value is what? 0.6 times 22. It's more than the $10. This more than, so I think this is correct. Okay. So 0.45 times 22. Yeah. So the loss size we can use is 0.04. Okay, 0.04. 0.04. So you need to be very careful because the loss size is what is going to help you to know the amount that is going to what it has been factored in. So if you make mistake with the lot size, you are going to lose more. Okay, so you need to make sure you understand the lot size you are using. So the lot size we can use over here is 0.04. Okay, if you use 0.04, sorry, 0.04, you are going to get, yeah, so add the 5 to it. 5. Okay, let me see, I'm running it to a whole number. It's also going to be more, it's going to be $11. So you can use it 0.0, the lot size you can use is what, 0.045. That's the lot size you can use. With that one, you are going to get 9.9, which falls within that your risk, the amount you are willing to lose, which is $10. So you see, so now that is when, after I've gotten the lot size, which is what, so now the lot size I can use on this trade, the lot size I can use is what, 0.045. This is the lot size I'm going to use. So I have to make sure, if I'm risking $10, I have to get maybe the reasonable this thing, or sometimes when it comes to risk to reward, the market is going to what, determine that. But you need to make sure what, you need to make sure, okay, you need to make sure you are getting more than what you are risking. Okay, you are getting more than what you are risking. So if it breaks the high, I'm going to take a buy. So it has broken. So you see, now the market has stopped me out, and you see what's happening again. So you see what happened. What happened over here? What time? So I told you initially the timing was very bad. You see, at first, price stopped the ass out. You get, so imagine at first I risked what? Imagine at first I risked all my $100. I wouldn't have been, because the market again gave opportunity. It gave an opportunity again over here, which, yeah, it gave opportunity over here, which I can take or capitalize. And you see price go to the target. You get it. So the first one, price just took us out. Fine. So this is when I'm going to be very patient and wait for the second one. Give myself second chance. If price hits me out, then I'm not going to what? Just fuck with the market again. You get it? So that's what you need to understand. It's a game of probabilities. Okay, so you need to give yourself chances. Okay, give yourself chances. Don't risk your trade. You all saw it over here. The first trade was a loss. We took advantage of the second one. Price gave us what? So at this point, if maybe we are risking like 1 point, the first one was 1%, the second one we are getting 1.57%. At least if you deduct what you have risked and what you are gaining, you are going to get like point something percent, which means what? You are ahead, you are profitable, you have made money from the market. Someone lost his account, someone lost money, but for you, you have profited from the market. You get it? So that's what I want to tell you about. You have to always manage risks. You get it? You need to always remember you are going to manage your risks. Okay? So at this point, if you have any question, let me know. Is anyone having a question? Yeah, Danny, I've seen you raise up your hand.
Sir, good evening.
Good evening, Senior.
I'm fine. Please, can you go through how to calculate pips on gold, the gold pair, especially using the FX position size calculator?
My FX book position size calculator.
So let's assume you have a gold pips of about SL of about maybe 235.
So with gold, you when it comes to the trade size, using my FX book calculator, input the lowest lot size over here. The lowest lot size is 0.01. So input over here. You said you have SL of what?
235.
235.
Yes.
Your account size is what?
Let's assume it's 5K.
Rexing what?
1% on that.
So you can use 0.02. So let's see if it's right. So 0.02, the monetary value is 0.2 cent multiplied by 235. So you are getting $47. So 1% on 5K is $50. Yeah, so approximately.
Okay.
Yeah. So when you are calculating it, the trade size input 0.01 over here.
Okay. I think that's right.
Yeah. So Ruby, if you get sorry.
I used one like the currency page. So the lot so I had to go
It's
to a
not
lot.
yeah. Yeah, risk management is very, very important. You need to, if you apply it, you trade with no. A lot of us risk more. That's why sometimes when you are in trade, we panic because the moment the market starts moving against us, it's going to be disastrous. It's either you are going to lose more than what you anticipated. So we need to. So when you when you get the monetary value, multiply it by this one, and you are not get. So let's say maybe if you are using 0.25 multiply by this or 235, which is also more than 2. Yeah, so maybe it will be either 0.2. The lot size can be 0.021. The monetary value will be 0.21. That is going to give you, that's what is going to give you the 49.35. I think this one is close.
Okay.
All right. Any question again? Any question again? So now I'm more on gold. I'm also more on gold. Currency now sucks. Currency has become hard. Just invalidating. Any question? I hope you've understood. Those who just came, I hope people understood what I talk about. So it's not only about strategy. Risk management will keep you in the game. So understand that and use your losses as lesson. Learn from them. Any question? Okay, someone. Gabriel. Any question?
Yeah, good evening.
Good evening, sir.
Yeah, I just want to ask a quick question on the risk management. As part of your risk management strategy, if, for example, you plan yourself that you do 2 trades in a particular day, and then probably your setup for that day is good, and after the 2 trades, there are still opportunity on the markets. If you still want to go further by doing an extra trade, would that negate your risk management principle, or you can still take advantage on the market since the setup is still working?
So you see, what I talk about is subjective. It depends on the individual. So maybe you can be taking like 10 trades within a day, but you can also tell yourself within the day you are willing to lose 5% on your account. You get it? So according to your strategy, if you know your accuracy, your accuracy level is very high, then maybe you can just go in dividing this 5%. Maybe you can just tell yourself you are raising 2.5% on a trade. For me, like this, when it comes to gold, I risk 1%. When it comes to currencies, I risk 2%. You get it? Because I understand the nature of gold, I understand the nature of currencies. So that's what I do. But maybe you just tell yourself 5% that you are willing to risk on your account today. So depending on your skill level, it's very so amount you are willing to lose is not only about maybe 2%. That's why I didn't tell anyone to just risk 2%, 1% or something. I told you based on what your risk should be based on your risk, your skill level. Okay, your skill level. So if you know that you are very good in analyzing, your accuracy level is very high, you can just hit it hard. Looking at your past trade, you've been getting winning trades back to back, then you can increase your risk percentage. You get, but if you know your accuracy level is very low, you mostly get losing streaks or losing trades, then maybe give yourself more chances within a day. You can give yourself four chances, 5 chances, but it should be within this 5% you are risking. So you divide it by what? Maybe 5, maybe 1%. Okay, because overall you are willing to what? Your daily drawdown is 5%. You are willing to risk 5%. So you divide it, maybe 1%. You just take the trade. Okay, give yourself more frequencies. Your frequency of trade should be more. You get, because it takes time for you to get a winning trade, but it should be within your daily drawdown limit. You get it? So it depends. Everything, your risk amount you are willing to risk or the percentage you are willing to risk, it's all on you. Yeah, it's all on you. Have you understood it?
Yes, sir.
Okay. Okay. Any question again? Yeah, so camp, you are currently camp is on. So didn't join us out. If you didn't join, then it's a lot. All right, so it was okay. So maybe on Tuesday. Bye.